Good morning, ladies and gentlemen. How are we doing today? It's Thursday, June 24th, 8:56 a.m. Eastern Standard Time. Futures are looking green so far. Pre-market. News headlines. Jobless claims hold above 400,000 for the second week in a row. All right. Hopefully you're all having a beautiful start to the morning here. But I think we have a lot of good opportunity. Today, we're doing the pre-market prep for you guys on YouTube as well. If you guys enjoy this, join up, join the Trading Learning 101 Wolfpack. Every single day we do this pre-market prep. So this morning, I want to show you guys something pretty cool. And I think that this may connect a lot of dots for you guys. So let's take a look at this little chart here. If you're not familiar with this chart, this is a chart from Jesse Livermore. If you don't know who Jesse Livermore is, he's one of the greatest traders of all time. The dude has made millions back in the early 1900s, which in today's world would be billions of dollars. He made millions of dollars, lost it all, made it all back, lost it all, made it all back, and then lost it all, and then committed suicide. Dude was wicked. You'll hear a lot of day traders refer to him as the greatest trader that ever lived. I mean, it really takes skill to make millions of dollars like that, and his head must have been crazy. He lived a very crazy life. So this is his chart right here of shorting the stock market crash of 1929, I believe, where he made the most money. If you see here, it's a parabolic chart, and what he likes to look for is for that top out, for the dip, and for that retest, and that's where he shorts it. It's going to show you guys that human nature never changes, and these chart patterns are the same 100 years later. I'm going to show you guys some examples. So remember this chart right here. Remember the grind up, the ramp, the drop, and then the quick little pop here, and then the ultimate downfall. Now look at ABIO. You see that parabolic move to the upside, gets that dip, pop, crashes, pop, crashes. Let's look at this chart. This is the S&P 500 back in 2002. You see how it gets that ramp, the dip, the pop, and then the ultimate downfall. And then the last one here, Bitcoin. You see how the two charts, they look very similar. The grind up, the parabolic move, the dip here, one little pop, crashes. The grind up here, the parabolic move to the upside, the crash, the dip, the pop right here, and then it crashes and fades out. So this is an example I wanted to show you guys. Patterns stay the same because human nature never changes. It never changes. No matter how many years pass, it's all the same. So keeping it simple and to the basics. Don't overcomplicate things. You guys know from a lot of my content and videos that I'm really upfront with you guys. Like, I don't hide any bullshit, for real. All these people out here, when they teach you guys stuff, They like to cut corners and put their own little twist on things and then present it to you, reword it, rename it, repackage it, when it's been the same for hundreds of years. Real quickly, look at that Tulip Mania chart. It's the same thing pretty much. Tulip Mania. Tulip Mania happened in 1636. That's a long time ago, guys. There's your run up and then your crash. Human nature just never changes. So when you start to realize that and you're looking at all of these charts, memorize the chart patterns and we take advantage of human behavior. We identify human behavior and emotions on these charts and take advantage of them because other people out here don't know what they're doing. Agreed? So it's just a little something cool I wanted to show you guys today. Really put it in your face that these patterns have been the same for hundreds of years. I mean, even Jesse Livermore was making bank off of patterns that still happen today. That's pretty fascinating. All right, so let's get into my watch list for this morning. Yesterday was a pretty good day. We traded MOXC. This had a really good move. This was like the #1 play of the day. Nice move from $18 up to $22. Nice $4 range. It's pulling back, holding at this 20. Let's see if it can hold this 20 and build up off of that. If it falls through 20, it's going to go all the way down to 19. Possibly even $18. The only thing that worries me is when you look at that daily chart, this stock has been green for 4 days straight. So it could be starting to get exhausted. Just proceed with caution. I do think it could offer a couple opportunities, but also keep in mind, MOXC is the type of chart you trade it. If you make money on it, be done with it. Do not hang around and keep trading MOXC because this stock, the personality of it, it likes to do a lot of crazy stuff. If you zoom in yesterday it fell apart right here to the VWAP, and then it just squeezes right back up to new highs. So you could easily get wiped out, and then this thing could turn around on a dime and just shoot up. This stock has a lot of range, so watch your size. This MOXC, when it spikes, it can rip a couple dollars, $2, $3. So be cautious with your size. We also got ORPH gapping up this morning. ORPH just will not die. If you remember ORPH, this thing is a previous runner. It ran 3 times now within the last 2 weeks. Here from $5 to $80. Here from $10 to $25. And then yesterday it had a good push from $6 to $9. It's setting up pre-market. It's getting a nice little gap up. If this thing starts pushing and breaking $8.50, $9, this thing's a mover. It can skip up for sure. It can definitely run up and test that $10. If it breaks over 10, look at that big gap from when it crashed down right here. So over 10, this thing could run all the way up to $13. It's a low float stock. People remember it. It's fresh on their mind. Keep this bad boy on the back burner. We also have DDD setting up. Now look at this chart. You could see there's a clear resistance wall right there at $38. This thing is just getting tighter and tighter and tighter and tighter. We don't know for sure which way it wants to go yet. Right out of the open, it could start surging to the upside, or it could start falling down really hard. So DDD, there is an opportunity there. Just let the stock pick which way it wants to go. It's forming a nice ascending wedge. You could see the top the past 2 days here on it at $38. Break over 38, the next level is going to be 40. If it breaks over 40, your next level is going to be 45, 50 bucks. And again, with this stock, look up at that daily chart. You'll see the stock has been green the past 3 days. So keep that in mind when you're eyeing this chart. Again, if you guys are enjoying this pre-market prep on YouTube, join the Trading Learning 101 community here. Every single day in the Discord, we do this pre-market prep. We go over all the stocks that I have on my watch list, levels to look out for, what I think is going to be in play, and my opinions before this market opens. Let's also take a look at LOOP. This had a good move yesterday, running from $14 to $18. It pulled back down here to $15.50 and then consolidated for the rest of the day from $15.50 to $16.50. Nice $1 back and forth. We could keep this bad boy on watch as well. It most definitely could pop right back up to 17, and then it's only $1 away from its high at 18. What's that big next psychological level? $20. So currently, as of right now, we're $4 away from that 20. Everybody's going to want to get on that same page and be like, yo, let's get LOOP to 20 bucks. We're within reaching distance of it. So let's keep LOOP on watch. We also had RKT pop up yesterday. This had a nice run. Irish Wolf called this out yesterday in the Discord. From 19 to 20, 25, it's pulled back and now it's just sitting above $20. I could see it pushing up to maybe 21. The 10-minute looks good. You could definitely throw it up and just keep eyes on it. From 20 to 21, that's a nice little $1 range. And if nothing pops off, nothing catches your eye, and Rocket is looking pretty good, that may be your opportunity. LEDS. This bad boy had a nice $2 pop yesterday from $17.50, running up to almost $20. As you could see, it's pulled back. It's holding at this $19. We're $1 away from that $20. Look at the past on this. Look at how many times this stock has popped. People love going to this chart and this stock. It's a former runner. It's proven to us many, 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 many times that it likes to run. Keep this on watch. We also have Wish, WISH. $14 has been a huge resistance for Wish. It's been holding 13 and it's been going back and forth from 13 to 14. $1. We said if Wish starts breaking over 14 and holding 14, next level is going to be 1450. And if it can break over 1450, that's where volume could start coming into this and it could start taking off. If you're not familiar with Wish, it's that online store on the internet where you could buy off-brand stuff for dirt cheap. It's considered to be like the dollar store for the internet. Very popular site in the United States and around the world with people. All right, what else we got here? ALF. There's a lot of stocks on watch. A lot of them. That's good, though. That offers opportunity. ALF, this has just been an insane stock the past few weeks. 2 days ago, it ran from $8 to $17. Yesterday, it had a little morning sell-off from 15 down to 11.50, and from 11.50 had a nice surge up here to $14. This stock loves to have random surges to the upside. You have to be careful with ALF. Do not chase after this stock. If you've looked back at how the personality of this stock is, it loves to rip up and then just slowly fade off back down to where it ripped from. So you gotta kind of keep an eye on it and anticipate the surge and sell into the dumb money that chases after it. Top stock that I liked gapping up on the gap scanner is ARAV. And this stock, it really needs to get up and over that 750. That's going to be the trigger level. If this can push over 750, that's when volume's going to surge into this, and it could potentially take off, rip, and run. It's a pharmaceutical stock, so you got to be careful. Remember, with your pharmaceutical stocks and your biotechs, you want to hit it and quit it. Wham, bam, thank you, ma'am. Do not hang around and overstay with these pharma companies. They love money. And when their prices go up, you best believe they're going to want to take that money, that profit, and reinvest it back into the company. Because they need money to grow. They need money to find these drugs and develop these drugs. So it's a never-ending cycle. And I still don't know why people swing trade these pharma stocks. They're just straight up pure gambling stocks. In my eyes, pharma stocks are only really day tradable. You trade them when they're hot that day, and then that's it. Thanks, guys, on YouTube for joining us in the pre-market prep. If you guys enjoyed this, join the membership here. Like I said, every single day in the Discord, down here at the bottom. You see where everybody's at in here? We do this every single day. Pre-market prep, what I'm watching, levels to look out for. What are my opinions? So, join the Wolfpack, guys. Get out there, have a great day, be safe, think about